Hi there, hello everyone. Today I'm going to present before you when there is NFP data out there in the market, then how we can use that data and how we can use that data to take a trade in the forex market. So let's see what we can do. Okay, let's see first of all what it is. What is non-farm payroll? NFP is the measure of number of workers employed in the USA. Okay, and this indicator reflects the overall health of the economy and an insight into future data releases. And the index is published by BLS, is a US Bureau of Labor Statistics. Then further more detail about NFP, it includes manufacturing, construction and goods industry where 80% of the workforce works in the United States, and which is not included is people who work on farms, government, private households, and non-profit organizations. Okay, so this was the bit of basic information about non-farm payroll. So how to trade NFP? So when the data is out there in the market on a monthly basis, then definitely you will see some volatility. So the volatility around the NFP data release can create opportunities for profit as well as it can also amplify losses. So either you can trade into profit or trade into losses, depends on your strategy. So you have to be very careful in using this non-farm payroll data for your forex trading. Okay, so what are the trading strategies and which markets to trade? And with the NFP data release and the expected volatility generation in the markets, you can trade in three market categories. Number one, traders. Number two, investors. And number three, safe havens. Okay, now let's look at them one by one. So what's in it there for the traders? Which currency pairs they can trade? So traders, they always trade currencies like forex traders. Okay, that's what forex stands for. So traders can buy and sell currency pairs where there is a US dollar. These pairs show rather volatility and can be traded to with your preferred strategy. Okay, so what pairs you can actually look at and see volatility and then you can develop your trading strategy. So number one, euro USD. Number two, USD JPY. Number three, Australian dollar and US dollar. And number four, GBP and USD. So this is how you can actually trade these four USD pairs when the NFP data is out. So there is a highly likely that you will see a lot of volatility in the market. Okay, so what's in it there for the investors? What stocks to invest for investors? So investors can invest into shares as with the expected data release, there may be an expected future growth. So maybe NFP data may indicate or give a signal or some trend may be developed for the stocks that they can have volatility or they can show some movements. For example, Nasdaq. Number two, for example, S&P 500, Dow Jones, and FTSE. So these are the stocks investors can look into when the non-farm payroll data is out, and then definitely you have to analyze that data and which way the market is moving after the release of the data. And then we have safe havens, golds and bonds. Okay, these instruments could also show a lot of movement as the NFP data is released. So there is a trading opportunity in the safe havens as well, and we know that gold and bonds are very popular in safe havens. Okay, so trading scenarios, actual trading scenarios. So what happens in scenario one? You can trade on sharp moves, but never trade on sharp moves. What are sharp moves? Sharp moves in the financial markets, both up and down. So it's a kind of a knee-jerk reaction. So you will see when this data comes out, the market will sharply move in one direction. We also call a knee-jerk reaction. So never trade on that. Never trade on that. So scenario two, you wait for the initial reaction to fade. It involves that the one should wait for the initial movement of the price up or down to come back to its normal position. And then scenario 3, you can wait for the pullback if the price shows any pullback. And this approach is where the price has moved sharply up and down and then reverses its direction. You wait for the pullback and then take a position. So this is how actually you frame your strategy. So when you are there, you see the volatility, you see there could be a profit or loss, and there could be large short-term profits, or there could be greater short-term losses as well, then this is where your risk management strategy comes into play while trading. So you have to have your RM strategy in place. So it's therefore very important to pay attention to your risk management approach. So when you have that in place, you must have your risk management action plan in place so that you can close the position if you see that something is not going correct, or something seems to be going in a way that you had not actually imagined or analyzed, or it's likely to give you losses or damages. So you have to have your action plan in place as well. So this is how is an overview of non-farm payroll data when it comes out in the market. How can you use that data into your actual forex trading strategies? Alright guys, I will stop here. I hope you liked the video. I will see you next time. Have a good day. Bye bye.